Pantheon AI presents Goldman Sachs $1 billion Bombshell deal. Credo stock explodes. Bitcoin crashes 2%. Welcome to the PAI Morning Briefing. I'm John, and with me is Sarah. Today is September 4th, 2025, and we're here to get you ready for the day ahead.
Good morning, everyone. I've got my coffee, and I hope you do too. It's our little ritual before the markets go wild. Ready to jump in, John?
Absolutely. Let's start with a quick look at the markets. The S&P 500 is hovering around 6,474. That's up a modest 0.27%. The Dow is doing a little better, up about 0.6% to 45,470.
And rounding out the indices, the Nasdaq is holding steady at 21,567, just up 0.1%. The Russell 2000 is also in the green, up about 0.3% at 2,362. So a picture of cautious optimism, it seems.
Right, but it's a totally different story in the crypto world. Bitcoin is taking a hit today, down almost 2% to around $109,530.
Ouch. And Ethereum is following that trend, dipping over 3% to about $4,310. It's funny you mentioned the market's getting a gentle pat on the back. It feels like crypto is rethinking all its life choices after a late night.
That's a perfect way to put it. So what's the story behind these numbers? With the traditional markets, it feels like a slow, steady march. Investors seem risk tolerant, but they're waiting for a major catalyst. It's the tortoise from the fable, slow and steady.
Exactly. But that crypto downturn is hard to ignore. It's a reminder of just how volatile that space is. Are investors getting spooked by regulation talk? Or are they just waiting for the next big thing to reignite the excitement?
It's a great question. And that dichotomy really sets the stage for our main stories today. Let's pivot to the headlines. And first up is a huge one we've seen bubbling for a while. Sarah, you saw this one?
I did. Goldman Sachs acquiring a $1 billion stake in Rowe Price. This is huge because it's not just a deal. It's a signpost. They're basically opening up the private market buffet for individual wealth management clients.
A financial buffet. I like that. It's a move to democratize asset classes that were once only for the big institutions. It really makes you wonder if private market investments are about to become a staple in everyone's portfolio.
And the fact that this story keeps popping up just reinforces that this isn't a fluke. It's a strategic shift across the entire industry. If Goldman's making a move this big, you can bet others are watching very, very closely.
Definitely. Now let's switch gears to tech. There's a ton of buzz around a company called Credo. The headline is literally asking, is Credo the next hot AI stock? Their growth is apparently blowing Wall Street away.
Okay, so what's the secret sauce here? We hear about hot AI stocks all the time.
Well, their latest quarterly results and guidance just crushed analysts' expectations. They're a big player in AEC and optical offerings, and it's a classic case of a company not just meeting the hype, but exceeding it with solid fundamentals. It's a powerful combination.
Interesting. But it's not all sunshine and roses in tech, right? I saw some news about Salesforce facing some headwinds.
That's right, and it's a fascinating contrast. For Salesforce, the bears aren't worried about a lack of AI. They're worried about the opposite. A competitive, maturing market for their core products. The very things that made them a giant are now becoming their biggest challenges in a crowded field.
So on one hand, you have the explosive potential of a newcomer like Credo, and on the other, the pragmatic realities of a titan like Salesforce dealing with market saturation. A very telling dynamic.
Exactly. And here's another story that ties back to our earlier theme of democratizing finance. It seems 401k plans are starting to open up to private equity, and get this, even crypto.
Whoa, hold on. Crypto in a 401k? That feels bold. That's a major departure from the traditionally conservative retirement planning we're used to.
It is. It's basically a cautionary tale wrapped in an opportunity. Yes, you could get higher returns, but it demands a whole new level of financial savvy from everyday people planning for retirement. It's a huge shift.
So if we pull all these threads together, we're seeing this massive theme of consolidation and diversification. The walls between traditional and alternative investments are just crumbling down, from Goldman and Rowe Price to what's happening in retirement plans.
And at the same time, the tech space is giving us this split narrative. You have the explosive, forward-looking story of Credo and the more challenging, mature market story of Salesforce. It really proves that diversification isn't just a buzzword anymore. It's a necessary strategy.
So true. I mean, let's look at the finance sector specifically. This infusion of private market products is genuinely revolutionary for wealth management. It's like taking a classic cocktail and adding a wild new ingredient. You hope it's delicious, but there's always a risk.
And the institutions making these cocktails are juggling fireballs on a unicycle. They have to balance innovation, risk, and a constantly changing regulatory landscape. It's a high-wire act, and the big question is whether they can maintain investor confidence while doing it.
And these ripples go global, don't they? When a giant like Goldman Sachs makes a strategic shift in the U.S., you can be sure that regulators and capital markets all over the world are taking notes and adjusting their own plans.
Without a doubt, the world's financial markets are more like an interconnected web than ever before. One little ripple can absolutely become a tidal wave somewhere else.
So looking ahead, what are the experts predicting? I imagine more of this consolidation.
You guessed it. Analysts are forecasting more consolidation in wealth management as this trend continues. The prevailing sentiment is optimistic, but it hinges on proper risk management. No one wants that culinary disaster you mentioned.
Right. And in tech, the excitement around companies like Credo is contagious, but it also calls for caution. It's so important for investors to look past the hype and really understand the fundamentals. Is the growth sustainable, or is it just a fleeting moment of exuberance?
That's the key question. It feels like we're on the brink of a new era. The pace of change feels like the difference between a snail's marathon and a cheetah's sprint, and you never know which one you're going to get on any given day.
Which is exactly why we're here. So let's do a quick recap. Key takeaway 1. Traditional markets are showing slow, steady growth, while crypto is on its own volatile roller coaster.
Takeaway 2. The big money, like Goldman, is moving deliberately into alternative investments, potentially changing the game for individual investors everywhere.
And takeaway 3. Tech is a tale of two cities. You have high flyers like Credo showing massive potential, while established giants like Salesforce are navigating the challenges of a mature market.
Perfectly summarized. And as we close out, we want to leave you with a few questions to think about. What will be the next disruptive partnership that changes the investment landscape?
And how can these massive institutions best balance the allure of these shiny new alternatives with the need for stability and risk management?
And finally, how should we as investors tell the difference between genuine, revolutionary tech and just speculative hype? These are the questions that will define the market of tomorrow.
Thank you so much for tuning in to the PAI Morning Briefing today. Our goal is to be your trusted co-pilot, helping you navigate all this complexity.
And remember, if you have questions, our AI co-pilot is always there for more personalized insights. We believe learning shouldn't feel like a full-time job. Until next time, keep questioning, stay curious, and have a fantastic day.
Pantheon AI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.